Welcome back, ladies and gentlemen, to Golden Futures Channel, advancing major projects in Canada amidst a commodities renaissance. Joining us right now is the Chief Executive Officer, Stephen Wickinson. Welcome back, sir.
Well, great to be here.
And always a pleasure to have you back, man. This is a fascinating time for the gold markets, and I wouldn't mind having a broader view conversation today surrounding that very topic, because it looks like gold's headed back to $1,900 an ounce, anticipated by these Fed meetings. And obviously, I've seen a lot of tech investors recently start hedging their portfolios with the asset. And considering over the last, interest rate hikes over the last decades, every single time gold's gone up 100% of the time. And I wouldn't mind getting your opinion on this. What are your current thoughts on the gold market being involved in the mining industry?
Well, one of the things we have to watch, of course, is the gold price, because everybody that's in the gold industry is a price taker. Yeah. And so we have to schedule ourselves around that control on what we do. If you look at inflation that's going on right now, we've got very high rates of inflation, probably the highest we've had, in 20, 30 years. But it hasn't quite been reflected in our gold price. And that gives me a feeling of anticipation. We've got a few things that are new to the influence of the gold price. We've got the cryptos. We've got a pretty good tech boom still going on in the marketplace, which is attracting a lot of the risk money. But the reality is, it's the best hard asset out there. It's liquid. It retains its value. It may not escalate, but it doesn't seem to pull back that much necessarily over the long term either. So, because I'm looking at a 10-year chart on my screen here right now, and with the exception of what we got towards the end of 2020, when gold was up at around, peaked at a little over $2,000 an ounce, we had a bit of a pullback. I guess gold got COVID just like everybody else, but this year we've seen steady gains. And right now with gold, at 1870 US, which is about $2,400 Canadian, it's in a wonderful position for practically everybody in the world who wants to look for gold, find gold, produce gold.
Yeah. And speaking of just the tech industry there, I just managed to catch Shopify earnings, and it dropped rapidly. It feels like we're in this domino effect where a lot of investors right now, I think they were anticipating the volatility, but not stomaching it as well as they would have thought. So we're seeing this shift. I've noticed even in our chat groups, a lot of people are shifting into ETFs right now. They're looking for those stable assets to get rid of that volatility out of their portfolio. And I think that's starting to bleed over into the gold market. And like you said, there's just so many things leading up for gold this year that it's kind of hard to ignore and be bearish on at this point, considering how many people were more into Bitcoin than gold a mere year ago, right? Now, speaking about margin of safety here, I noticed, like you mentioned, when you're going into the mining industry, you're always kind of looking at gold playing within certain realms and trying to, make sure there is that safety in case it drops. Now, when you guys got into this, what kind of gold price would reflect the best sustainability for you? And obviously anytime we go higher is better, but how did you kind of price that in, and at what price did you kind of wrap your head around that when you were picking up these properties?
Probably one of the best things for us to be working within is a market where you're seeing a positive slope on the change in the price of gold. Negative slopes tend to impact the sentiment surrounding the gold market. People get really grumpy. It might be a drop of $10, but the $10 comes from 2000 down to 1990, but people just seem to lose that positiveness with respect to what gold's doing. And that's just part of the churning that you get in the market. It goes up, it goes down. The other influence, you mentioned it there too, is the ETFs. ETFs buy physical gold to reflect the people that buy into the gold ETFs, at least. In order to reflect the people who are buying and selling into their market cap. So, it's not a simple thing where, oh, well, we got inflation, we better have a good gold price. Not anymore. We've got other things out there. I heard an interesting comment this morning on the news networks about the comparison as a hedge against inflation between cryptos and gold. But cryptos have been going up hugely, mostly on demand side, not necessarily as a reflection, I think, of any inflationary influences. But at the same note, boy, can they ever pull back too? And so their volatility is much greater. And if you're a day trader or an hourly trader, you probably do better than you would on a more stable gold looking day, so I tend to think that from our perspective right now, we're in a good place. That, we've seen a positive change in the price of gold, both in Canadian and US dollar terms. We're Canadian explorers. We're in a Canadian market, which is, we know is stable. We know is a good environment for responsible gold mining. So.
Yeah, for sure. Not to drill you too hard here, but speaking of though, because you guys are in the exploration phase, right? When you went into that, what was the gold price in your mind that if it dropped, like your minimum drop down price, what to make it comfortable for you guys would have maybe been what, 16, 17? I mean, in this inflated gold price or sitting at this $1,800 range, it's made more profitability for the top 50 gold miners than they have seen in their entire history. Yet a lot of the commodity stocks are trading down, right? So it's setting up this intriguing value play. But what makes you the most comfortable at the lowest gold rate possible for you guys? Like,
well, I would imagine that if we saw a breakdown below $1,700 US right now, this market sentiment would impact us, very, very bad. And that's the key sentiment. If you got people out there that are feeling good about the changes in the gold price, either the stability or the upward track of it, that's good for us. And what we need to do then is deliver to the gold market increasing amounts of gold being discovered.
Yeah.
And it's, that's the, it's an intangible, but it's in the same measure, it is a tangible. When you get ounces in the ground, people are paying fairly well for that right now. Measured and indicated ounces, I believe, are being paid out at about $50 per ounce in their market cap. 100 million ounces of gold should give you, US $50 million market cap right now. So,
yeah, we're heading into some intriguing times, I must say. So on that note, just to finish up the conversation here, what should investors know about with gold futures? What's on your mind right now? Any insights or just anything that you think is prevalent to mention? Love to hear about it.
Well, we've already put out our first 4 drill holes, and each one of those drill holes hit the gold mineralization that we wanted it to hit. And then we got some, and we're blessed with some pretty darn good assays in there with widths, of mineralization up to 11.6 meters thick. We just completed the next 6 holes of the 14 of our inaugural program, and we've had a pause, and we've shipped out about, I believe, about 130 samples to the assay lab. I'm even more encouraged over what we saw in the intersections of these latest 6 holes, and simply because this type of mineralization that we have, it seems to require a combination of features, let's call it. It has to have the right looking quartz vein. It has to have sulfides within the quartz vein. But all in all, though, that's only the minor part of the mineralization. The rest of it is a particular, I just call it the black magnetic rock. It's a dike, and it seems to accompany the gold mineralization, and it seems to be the more messed up, sheared up, with little quartz veins and sulfides, the better the grade of the whole zone is. And we saw all those features in the last 6 holes we did. So will we be blessed with finding, high grade? High grade right now is five parts per million or greater, and we got it in the first 4. I'm pretty confident we'll get it in the next 6 too. So so hopefully that'll be coming out. That's what investors can be looking for. We do have property-wide exploration work that we've done that was completed by Gold Spot Discoveries. And I think that anybody that hasn't been with their head in the sand for the last couple of years knows that Gold Spot and Newfound Gold were responsible for the Keat Zone discovery in Newfoundland, and that's driven a beautiful gold rush in Newfie. Well, the same principles used for the finding of those zones by Gold Spot are being applied to the Hercules deposit in Ontario for us. And the first stage has been done. They've completed the airborne magnetics. Now they're integrating the geology, the geochemistry, and the geophysics to give an overall platform for directing our next major drill programs. So I believe we'll be finished our inaugural probably by May this year. Won't take long to incorporate the results because we're doing it in nice little steps. And by that time, we'll have a really good handle on what this property is shaping up to look like. And using old prospecting tools, we've got at least 4 more of these zones, just like the Golden Mile that we can go kick the tire on, that haven't even been really looked at all. So
lots of blue skies ahead. I appreciate you coming out today, Stephen. This has been a well-rounded conversation. Thanks so much.
yeah, my pleasure. My pleasure. Do stay safe.
And on that note, folks, I pass the question off to you. What do you think about the gold market, gold and futures? A lot of blue skies looking ahead. So, I mean, lots to discuss. Let us know what you think in that comment section below. Consider subscribing, because as that news comes down the wire, we're going to release it right here on this channel. So stay cool, stay awesome. And as always, I look forward to catching you in the next one.